Okay, good morning. My name's Gary King. I'm the publisher of Global Recruiter magazine, and I'd like to welcome you all to this morning's webinar, which is all about the annual leave and holiday pay for temporary workers, which we are running today with the FCSA, with a guest speaker from JMW. Just to give you a bit of background to this, we held a round table around a month ago with the FCSA, and we covered three main areas, one being compliance, the other IR35, and the third being holiday pay. And out of that 2-hour round table discussion we had, the biggest interest that we found was based around holiday pay. So hence we felt it was relevant and interesting to a wider audience to run a specific webinar, giving you guys more of an update and in fact the facts based around it. Just a quick outline of what's going to happen. Today we have two main presentations, then a question and answer session. Presentation number one is going to be from Simon Bloch, who is the partner at the FCSA assessor firm JMW Solicitors, followed by Phil Pluck, the chief executive of the FCSA, running the second presentation. Throughout both presentations, there's an opportunity for you guys to ask questions, and the questions will be formatted and asked to both presenters once they've finished their presentations at the end of the session. So throughout the session that we're running, please feel free to ask your questions. As I say, they'll be collated. We'll try to get through as many of those at the end as we possibly can. If you ask a question which isn't able to be answered during this session, then we'll surely get back to you afterwards, one-on-one, and hopefully answer that question for you as best we can. Before we start, I just need to get you guys to read on screen a small disclaimer that we must have you read, and for myself to read out to you, just so you know that the information shared in this webinar and in the slides is for general guidance only. It should not be used for any other purpose. It does not constitute and should not be relied upon as legal advice. On that note, I'd like to pass over to our first presenter. This is Simon Bloch, partner at JMW Solicitors, and he's going to look at the legal issues arising around holiday entitlement and holiday pay. Thank you.
Yeah, thank you very much for that introduction, Gary. And thank you to the FCSA and to Global Recruiter for inviting me to speak. My name's Simon Bloch. I'm a partner at JMW Solicitors. I've worked at JMW since 2014, and have worked in the recruitment sector since 2007. JMW have got offices in Manchester primarily, and also an office in London and an office in Liverpool. I've worked, as I said, in the recruitment sector for about the last 15 years, and work with the FCSA as a partner assessor firm, but also work with a number of the other trade associations in the sector. And we pretty much, in the employment team that I work in, live, breathe and sleep work that we do in the recruitment sector. So as Gary's introduced, we're going to look this morning at the legal issues arising from holiday entitlement and holiday pay. Just to bring that into some context for you, the laws that arise in relation to holiday and holiday pay primarily arise and come about through the working time regulations, which bring into force the Working Time Directive, which many of you will be aware is a piece of European legislation. And basically, everything that's in the Working Time regulations has to give effect to the Working Time Directive, and most of all the case law that we see that has challenged the issues in relation to holiday and holiday pay derives as a result of what has to be interpreted in the working time regulations in line with the directive. I think one of the first questions that I wanted to try and think about was why the law is so complicated in this area. We've had these regulations around since 1998 in terms of the working time regulations. And in my view, I don't think that the law in terms of the regulations has changed substantially. So why has it taken so long to make sure that we've got a clear understanding of how it works in relation to this? That's the first thing we're going to try and bust this morning. And also, I think it's often forgotten in relation to the working time regulations that it's primarily a piece of health and safety legislation to ensure that people have minimum rest periods and have a period of time away from work to make sure that their health and safety is protected, and that is often forgotten. I think what has happened is the law has evolved quite a lot, and the way people work has evolved, and how people actually take that leave and their reliance on holiday from a break away from work has changed. If we go back to the position that was prior to the working time regulations, back in the bleak old days, where unless you were a farmer or a child, you really didn't get any holiday unless it was contractually agreed between the parties. In fact, in Britain and the UK, we are probably one of the countries who use their holiday entitlement the most. I think there was a YouGov survey that was done a few years back to say we take a lot of holiday in comparison to some of our European counterparts. So that just brings into focus the position that we find ourselves in and why we get so much trouble with holiday pay and holiday entitlement issues. Can we move that on to the next slide, please? So just looking at some of the topics that we're going to cover this morning, we've got the first year of employment, what happens in relation to holiday in relation to the first year of employment. That's caused some problems. Holiday pay calculations, I think, has really been, may have been clarified and cleared up, but it still causes problems. Then we get normal hours of work versus no normal hours of work. Again, that definitely does cause problems. Rolled up holiday pay, well, we could be here for quite a long time talking about that. So that is definitely a problem area. And I think the next problem that's coming down the line, which I'll conclude with, is the Harper Trust and Brazell decision, which is not very far off being heard by the Supreme Court. So just in terms of the very basic points, when a worker wants to take leave, they're entitled to 5.6 weeks worth of annual leave, which on a 5-day week equates to 28 days. The working time directive entitlement is 4 weeks. Member states have been allowed in Europe to transpose that they must be required to transpose that minimum international law. So we've got 4 weeks minimum under the working time directive and 1.6 weeks additional annual leave. In terms of the leave year, the working time regulations set out that unless it's agreed in a relevant agreement, that the leave year will be from the 1st of October if you started employment before 1998, or the start date or an anniversary of when you started your employment is in terms of the leave year. That's how it operates. We move on to the next slide, please. So the first year of employment, this has definitely caused some problems, and I'll try and set out how the regulations interpret this. So where, as is usual, a worker starts partway through the employer's leave year, what the working time regulations say is that the leave entitlement for the remainder of the leave year in which the employment starts should be calculated on a pro rata basis, and fractions of a day are permitted. So if you just work that through, 28 days divided by 12, my very quick math shows me that's 2.33 days accrual per month. And during the first year of employment, the amount of leave that the worker can actually take under the accrual provisions provided by Regulation 15A of the Working Time Regulations, says that leave accrues based on 1/12 of a full year's entitlement at the beginning of every month. There is some debate about whether that's on the first day of every month or on the anniversary of the first month that you're in of your employment, for example. But the latter, I think the latter approach actually seems the more logistical way of doing it. Also, when calculating accrued holiday entitlement under Regulation 15A, if the amount of leave accrued includes a fraction of a day other than a half, this fraction should actually be rounded up to the nearest half/whole day. So what these rules are designed to provide for us is that stopping new workers from actually just taking all their annual leave in the very first few weeks of their employment and having no other leave to take during the remainder of the year. For example, somebody may leave and they've taken all their leave, all their entitlement. So it's a control mechanism. You can be more generous than this by setting it out in a relevant agreement, but you cannot exclude or go below what the minimum is provided for in the Working Time Regulations. Then the problem comes about when you get to year 2 of the employment, because these rules totally then disappear. At the start of year 2 of the employment, a worker is entitled to their full 28-day allowance from the start of that year. Now, you are able to limit how somebody takes that leave by saying you can only take, for example, 10 days entitlement to leave in any one period. And there's notice provisions also in the Working Time Regulations in terms of taking that holiday. But you can't just say to somebody in year 2, you can only take holiday based on an accrual basis, based on the similar rules that happen in year 1. So that's the first misconception and a myth that is very commonly misunderstood. If we move the next slide on, please. So then we get the holiday pay calculation, and I'm going to look at what happened previously prior to a recent change that was made in the law under the Good Work Plan. So the previous position was the minimum statutory requirement, as I've said, is 28 days, 5.6 weeks. It's at the discretion as to whether that does or does not include bank holidays or not. That's the minimum entitlement of 28 days. Where somebody, for example, has irregular or flexible hours, the previous position was a 12-week reference period was used to calculate what a week's pay was by an average of their earnings over that period. But under that system, it seemed to be that depending on when people worked and peaks and troughs in the period, that certain types of employees could be disadvantaged by taking holidays during quieter periods. So under the Good Work Plan, they changed that under that piece of legislation, the Employment Rights, Employment Particulars and Paid Annual Leave Amendment Regulations, and that amended Regulation 16 of the Working Time Regulations, which basically increased the reference period from 12 to 52 weeks, which seems to have leveled up the field a little bit more in terms of making sure that in terms of what a week's pay is, that the average period is for at least 52 weeks. And I'll talk about that in a bit more detail in a moment. So we move that on to the next slide, please. So this slide just illustrates for you in terms of a holiday pay calculation, how it would work for people on various different shifts, various different patterns. So for people on fixed hours and fixed pay, whether they're full or part-time, it's really quite simple. You pay a worker a week's pay for a week's leave, really quite straightforward. Or is it? We'll have a look again as well at that point in a minute. For those on shift work with fixed hours, full or part-time, we've got the average number of weekly fixed hours a worker has worked in the previous 52 weeks at their average hourly rate. And for no fixed hours, so those on casual working, including those on 0 hours contracts, you've got a worker's average pay from the previous 52 weeks, but only counting weeks in which they were paid. So far, pretty straightforward, you would think. If we move that on to the next slide, please. So just some common myths before we get into some more detail. Pay for the purposes of holiday pay calculation is limited to basic salary. As we will see, that is not right. Weeks where no remuneration is received count towards the calculation period. That's another myth. And the third myth is that the calculation period must always be 52 weeks. That again is not right, and I'll try and show you how. We just move that on to the next slide, please. So what should be included? So we've now looked at the mechanisms as to some of what should be included. And as I started, the next myth is that it only should include basic salary. I think let's just track back a minute, because what we get from the Working Time Directive under Article 7 is as follows. What member states were allowed to do was that they had to take measures that were necessary to ensure that every worker is entitled to paid annual leave of at least 4 weeks in accordance with the conditions of entitlement for granting that leave under the legislation. And the minimum period of paid annual leave cannot be replaced by an allowance in lieu except for when the relationship is terminated. So that's what we get from the Working Time Directive. What we then had a number of years ago in a case that was referred to as Williams and British Airways PLC, which was considered by the European Court of Justice. That was dealt with under the Aviation Directive, but has similar provisions to the Working Time Directive. What it basically said was that any payments that were intrinsically linked to the performance of the tasks which the worker was required to carry out under their contract, or any payment that was related to the personal and professional status of the worker, for example, a payment related to their length of service, should be included in relation in terms of the calculation of holiday pay, and coming back to what I've said, a week's pay for a week's leave. So we then had a line of cases that flowed from that British Airways case, and you'll see I've referred to at the top Bear Scotland, Willits, Flowers and Lock, just to give them their short form names, as to what should be included. And we'll just go through that list as to what should be included. Clearly some are more common than others, but commission payments, that came about in the case of Lock and was a well-publicised decision at the time and ended up going to be heard by the European Court of Justice. They decided under the Working Time Directive in Mr. Lock's case that holiday pay cannot be calculated on basic salary alone, where the worker's remuneration included commission determined by reference to sales achieved. If commission wasn't taken into account, it was decided in the Lock case that the worker would be at a financial disadvantage when taking annual leave, because no commission would be generated during their holiday period, and they may be deterred from taking the annual leave if commission wasn't included in their holiday pay. So that was what was decided in Mr. Lock. We then have incentive bonuses. Overtime pay also caused a whole bunch of issues, and that was the feature in both in the Bear Scotland case and in the Willits case and in the Flowers case. I won't go through all of the facts of those particular cases, but they all caused a problem, and the English courts had to look at that, and in all cases found that overtime payments should be included where there was a sufficient degree of regularity, and payment for the overtime should count as normal remuneration for the purposes of the Working Time Directive. And that was in relation to the 4 weeks that, if you recall, I referred to at the beginning of this presentation. So that has also caused some problems. We then get productivity and performance bonuses. that should be interpreted in the same line, along the same lines. If we get a performance bonus that is intrinsically related to the work that somebody is required to perform, no matter how it's set out and labelled in a contract, it should be included for the calculation of holiday pay. And I've seen plenty of contracts along the line that call something a discretionary bonus. And the reality of it is that there is no discretion to that bonus because it's intrinsically related to the number of hours that somebody is required to undertake. And therefore, in my view, should be included in the calculation of holiday pay. If we then move on to the next slide, please. We then get the difference between no normal working hours and normal working hours. If a worker does not have normal working hours, a week's pay is calculated on an average of all remuneration that's earned in the previous 52 weeks, or the number of complete weeks the work has been employed, if that's less than 52. If you remember what I said on one of the slides, it was a misconception, it was a myth that it had to be a 52-week period. So we also get to the position that where there are weeks where no remuneration is received for the purposes of the calculation, they are ignored. And earlier weeks are brought into account up to a maximum period of 104 weeks before the relevant calculation date. And as I've said, it can include overtime payments and commission. So that's the positioning under no normal working hours. We move to the next slide as well, please. And this just gives you a flow chart just explaining how it actually does work. So we look at whether the employee does have normal working hours, fixed pay. If the answer to that is no, we then look at whether they've been employed for at least 52 weeks, and it gives you the answers as to how you calculate a week's pay. I think that's pretty straightforward, but again, is one that you would be surprised as to how many people do get wrong. We move to the next slide, please. We then get normal working hours. So a worker with normal working hours will have their pay generally calculated with reference to those hours. It usually means basic salary and disregards any overtime unless it's guaranteed compulsory overtime and without any additional bonuses, commissions, overtime premiums or allowances. Now, my experience in the recruitment sector is it's going to be very rare that you find people who have normal working hours. Normally, normal working hours is by reference to somebody who knows exactly when they're going to work, what times and what hours per week they are going to undertake. So I'm struggling to see in many cases where you get to a situation where temporary workers are going to have normal working hours. But for normal work, for those workers with normal working hours whose pay varies by reference to the times or the dates on which the work is done or the amount of work which is done, a week's pay is calculated using the worker's average remuneration over the 52-week period before the calculation or the number of weeks, as I've said, that the worker has been employed if less than 52. Also, where the remuneration varies with the amount of the work done, a week's pay is calculated by reference to an average of what was payable to the worker over the previous 52 weeks. However, bonuses and commissions will not always fall into that category. So that hopefully clears the position up with normal and not normal working hours. If we move to the next slide, please. Now, we could spend quite a long time talking about rolled up holiday pay. It's probably a topic in itself, really, but I'll try and summarize it for you as succinctly as I can. So for those of you who've not really come across rolled up holiday pay before, I'll just try and explain it in brief terms. It's quite common in the recruitment sector and with umbrella companies for people to pay rolled up holiday pay, but it's basically the practice of not paying holiday pay when the worker is on holiday, but making an additional payment to the worker during the period when they're working, but it represents a pay due in respect of the holiday period. Now, what we have to do in order to try and analyse rolled up holiday pay is to go back to what was considered by the European Court of Justice in the case of Robinson Steel, and it was conjoined with a number of other cases at the time, and they had to consider whether the practice of rolled up holiday pay was consistent with the Working Time Directive. And please bear in mind what I said at the very beginning, that under the Working Time Directive, the requirement is to ensure that somebody takes their holiday, and that is the most important point that has considered whether rolled up holiday pay is lawful or not. So it's contrary to the Working Time Directive for a payment of statutory annual leave to be made in the form of part payments corresponding to an annual period of work and paid together with remuneration for work that is actually done. So what the European Court of Justice basically said was rolled up holiday pay is not legal. They also went on to say in the Robinson Steel case that member states must take measures to ensure that their practices are compatible with Article 7 of the Working Time Directive. But they also then said that sums that were already paid to a worker under a rolled up holiday pay scheme could be set off against any holiday pay that is due to the worker, provided, and this is the most important thing that we learn from rolled up holiday pay, that the arrangements are sufficiently transparent and comprehensible, and that the sums do represent an addition to pay for work done. What you used to find was that people rolled up holiday pay into the rate. It was never clear to them that it was that represented an additional payment for holiday pay, and therefore it was never ever clear to them whether they were getting a payment in respect of holiday pay or not. So the position in relation to rolled up holiday pay, technically in terms of the law, is it is unlawful. It is not allowed. It is incompatible with the Working Time Directive. We even look at what the current government website says, and you can see the quote at the bottom. Holiday pay should be paid for the time when annual leave is taken. An employer cannot include an amount for holiday pay in the hourly rate known as rolled up holiday pay. If a contract still includes rolled up holiday pay, it must be renegotiated. There used to be some provision on the government website that talked about rolled up holiday pay, but it has now been replaced with that statement. So you can see that the government quite clearly states rolled up holiday pay is not legal. Now, that being said, and I have set out quite clearly that what the legal position is, I know and I am aware, very aware, that rolled up holiday pay is regularly paid within the recruitment sector to workers and is done correctly in terms of making sure that workers fully understand what they are paid, and therefore it complies with what the European Court of Justice had to say in terms of it being transparent and comprehensible. That doesn't transfer into something being legal, but the reality of it is that if you pay something that is transparent and is comprehensible, that somebody understands, the chances are that if somebody was to take you to an employment tribunal, that they would not be awarded any further and additional compensation, because the position under the Working Time regulations is that if you don't pay this holiday pay properly, you could end up paying it twice under the rolled up system that you're operating, and if somebody successfully challenges that you haven't paid it correctly. So if we just move on to the next slide, which just highlights those risks that I've referred to. So the rulings have identified that rolled up holiday pay basically creates a disincentive and possibly a barrier to taking holiday. And as I've said, the worker who claims that they have been prevented from taking the holiday is entitled to just and equitable compensation. And rolled up holiday pay may not always give the worker the correct amount of holiday pay if they have irregular hours, especially if there are weeks in the year where the worker is neither working nor on paid annual leave. And that nicely ties up into the final piece of this, which relates to the Harper, Trust and Brazell case. So if we can move on to the next slide and the final slide, please. So Harper, Trust and Brazell highlighted the problems in relation to the calculation of rolled up holiday pay. And I did omit in the last slide to explain that the typical calculation that is used in terms of working out rolled up holiday pay is 12.07%, which basically relates to the period of annual leave of 5.6 weeks, and a calculation that results in 12.07%. And Harper, Trust and Brazell has highlighted problems in the calculation of holiday pay. I'm not going to go through much of the facts of Harper and Brazell, but in very brief terms, Miss Brazell was a visiting music teacher who worked at a school that was run by Harper Trust and was employed under a 0 hours contract and basically worked mainly during term time, which consisted of a period of 32 and 35 weeks. She had a contract that provided for her to have 5.6 weeks annual leave entitlement, which was the requirement under the working time regulations. And there was a challenge to this in terms of what the accrual mechanism should be in relation to somebody who was a part year stroke term time worker. And what the issues were in this particular case, where there are weeks in the year where the worker is under contract and therefore accruing annual leave under the working time regulations, but is not working on paid annual leave or on paid annual leave, that causes a problem. They remain entitled to 5.6 weeks paid annual leave, but this entitlement cannot be prorated, can't prorata that entitlement to reflect the fact that they don't work the whole year. Remember, these people are on a permanent contract. So the problem was in this particular case was that Mrs. Brazell was arguing that her accrual mechanism should actually be a lot higher and should be 17.5% of annual earnings as holiday pay in relation to the rolled up rate. And the school was saying, no, we've done it right, we've prorated it, and it clearly is 12.07%. Now, this decision, which has gone in favour of Ms. Brazell, both at the employment tribunal level and going through the courts, is now due to be heard by the Supreme Court starting on the 9th of November. Now, it may be some time before we get a decision, but the difficulty here is that this will arguably apply to all 0 hours workers on permanent contracts, and calculating holiday pay on the basis of 12.07% of hours worked will no longer be acceptable and could give rise to claims from workers in the employment tribunal that they have had an unlawful deduction from their wages. So again, this is something else that we're going to have to add to the whole list of issues that I've just referred to as to what should be included in relation to in calculating holiday pay and the correct accrual mechanism. So that's me. I'm going to hand over now to Phil because I know I've already gone through my time. Sorry, Phil.
Absolutely fine. Thank you very much, Simon. First of all, good morning, everyone. And I think it's important just to pick up on some of the things that Simon has said, and I'll go into detail in terms of how that looks in terms of umbrella employment. But just an overview, really, of how the market shifted, particularly since IR35 reforms in April. FCSA members particularly have seen around about a 40 to 50% increase in movement from PSC contracting, limited company contracting, over to umbrella employment. And there's a common worry there in that people moving into umbrella employment, bearing in mind the complexity of what Simon's described, people moving into umbrella employment perhaps lack knowledge. There's certainly sometimes within the umbrella sector a lack of transparency, and the question mark remains over the umbrella sector as a whole is how proactive is it, and how proactive is the recruitment side of the supply chain in ensuring that contractor employees under umbrella employment actually do receive all of the rights that Simon has described. So if we could just move on to the next slide, and in fact we can skip my photograph and move on to the next one if that's okay. There are some areas of concern which you can help with, which FCSA can help with, because primarily FCSA are there to protect the contractor, to ensure that the contractor's rights are adhered to and that they work in an arena of good practice and ethical practice. I think we're all here on this webinar today because we hope that what happens is that when you agree an assignment rate with an umbrella company, that assignment rate contains employment costs, contains the margin of the umbrella, it contains the gross amount of pay that the contractor is entitled to, and included in that is the entitlement of holiday pay, be that accrued or rolled up. That's an assumption that we would all like to make, but sadly it's not an assumption that bears any resemblance to reality. And FCSA work very closely with BAYS, with HMRC, and I'm delighted to say that one of the sort of small prints in the recent announcement that there's going to be a single enforcement body is that for the first time we know precisely which body is going to be responsible for actually dealing with non-payment of holiday pay to contractor employees. But what is happening out there at the moment in terms of poor practice? Well, the first thing is that accrued pay, which, as Simon points out, is the legal element of pay, and the technical legal element of pay. The accrued pay area is the area where it is most abused in the umbrella sector. But contractors tend to be very busy people. They move from contract to contract, and actually, because of that lack of knowledge and that lack of understanding and that lack of transparency that sometimes exists, a contractor will move to another contractor and possibly even to another umbrella organization in order to fulfill the next contract. What that means in reality is that sometimes they say, I didn't pick up my pay. The pay that I should have got under the accrued terms, or I didn't take my holiday, is owed to me. It isn't helped by sometimes the contract, which I'll move on to, the contract of employment being vague, but nor is it helped by the employment tribunals often time barring any such claims. So it's important that the contractor is fully educated, but at the same time we have to understand sometimes that the responsibility to educate them is us, not necessarily the contractor. So the thing that will protect the contractor is the contract of employment. And often that is vague, and what it will do is make mention of the very basic elements that Simon has touched on, and it will say you are entitled to the minimum statutory amount of leave. It won't necessarily say that that leave is accrued. It won't say how it's calculated, and all that does is create a vagueness which actually non-compliant umbrellas can operate through. and ultimately take the money that actually is owed to the contractor and not to the umbrella organisation. So another area that we have observed and that we have discussed with BAYS is where, again, there is vagueness within the contract, where holiday pay fails to materialise when an umbrella employee takes sick leave or paternity leave or maternity leave, etc. Any contractor employee, any employee, you or I, are fully entitled to the holiday pay element of our contract, even if we are on sick leave or on maternity leave. That is our statutory right. But again, you will understand that sometimes large movements of people through umbrella organisations means that some of those people don't understand that or realise too late that they haven't been paid. And then the final one, which is a common one, is that holiday pay is calculated on basic pay, or even in the worst scenario on national minimum wage. And as Simon's pointed out, and I just re-emphasise, holiday pay is an entitlement based on the gross pay. So it doesn't matter what you call anything else, basic pay, bonus, discretionary bonus, additional pay, whatever it may be, holiday pay should be paid out, calculated and paid out based on the entire gross pay of that contractor employee running through an umbrella. So if we could just move on to the next slide, please. So I'm going to just push the boat back slightly against you, the audience, at this stage. I'll go on to just describe really what FCSA do in terms of this issue and how they address it. But actually, a number of you within the audience who are recruiters will have a compliance pack. But actually, my observation and our observation is that not all of you provide a compliance pack. Compliance pack which goes to the umbrella organisation that you want to engage as part of the contract that you're running for an end client. And that compliance pack needs to very clearly state what you expect in terms of holiday pay, how it's calculated, how it's accrued, how it's advanced. I say advanced because that's a term we use in FCSA for rolled up holiday pay. But the important thing is that you need to ask questions around that, as well as providing that compliance pack. You're in control of this. You're in control of really the standards that operate around holiday pay. You can cease to allow a contract to operate if that compliance pack is not being adhered to. But one of the other areas is that you can mystery shop. We mystery shop our own FCSA members on a regular basis. But at the same time, I'm encouraging you to do exactly the same. Put yourself in the position of a contractor, ask how holiday pay is calculated. And if it's very vague from the very beginning, that should mean that you've got other questions that you need to ask that umbrella company. Holiday pay alone needs to be evidenced elsewhere. So sample illustrations, pay slips, how it's calculated, what a sample contract looks like, and how that sample contract fully explains the calculation, what you're entitled to, how you're going to get that money, or indeed, under working time regulations, how you're going to agree the time off and be paid for that time off in terms of holiday pay. So if we could just move on to the next slide, please. So let's just have a look at a sample payslip. Now, these are, if you like, best in practice payslips. They've been provided by one of our business partners, Merit Software, and this one is a payslip based on the accrual method. I hope you can see that. I'm having a little bit of difficulty just seeing the detail, but I'll just talk it through with you. Bear with me. So this is accrued. What this has to do, first of all, top left-hand corner, you will see basic pay and additional pay. So all of the payments need to be added up, and going along Simon's calculation, we need to calculate pay entitlement or holiday pay entitlement at 12.07%. Now this is accrued, so what has to happen, what should happen, is that the contractor who's looking at their payslip and their reconciliation statement is able to see that A, they have been given a minimum of 12.07% as part of that holiday pay, and B, it should be transparent. So the bottom right-hand corner of that payslip clearly shows holiday value accrued at £45.91, holiday value taken, none in this period. So actually they've got a holiday value outstanding of £45.91 to take forward with any holidays they wish to take, knowing that that's going to be part of the payment whilst they're on holiday. Further confirmed in the reconciliation statement, where there is a line there clearly showing what holiday provision has been paid. Now that's best in practice. Does that happen throughout the entire industry? No. Is it a requirement of FCSA members? Yes, it is. That level of transparency, it may be slightly different, but that level of transparency is a requirement of FCSA membership so that the contractor understands fully what they're entitled to and what they're getting. So at the earliest opportunity, they can query what they need to query. So if we move on to the next slide and then look at rolled up or advanced holiday pay. Again, apologies if you can't quite see the detail, but I'll quickly talk you through this. This is where actually this money now starts to appear as a payment. And again, we have basic pay and something called additional pay. As Simon's pointed out, that can sometimes say bonus, but whatever it says, there's an amount of pay that needs to be added up, and then the holiday pay at £45.18 in this example has to represent 12.07% or more. And again, that has to be clearly demonstrated in terms of what they're getting in terms of pay. That £45.18 then actually reverts into a payment for them. And again, that's illustrated in the reconciliation statement, right at the very bottom where the letter T is in trial. And that shows that that pay has been brought forward at £45.18. And it also shows that it's been taken during this period. Again, complete transparency for the contractor so that they understand precisely what they're getting. Now, but we need to understand this can't just be the only assurance that the contractor gets. So if we can move on to the next slide, and I'll just briefly talk you through what a contractor and what you as a recruitment agency should actually expect. These are just some of the areas that we cover in our assessments, and I should just emphasize, I don't and we don't actually do the assessments on FCSA members. What we do is we ask companies like Simon at JMW to independently assess the members and to make sure that that assessment is evidence-based. And we simply get the results back and either say you can't continue in membership, or you can because you've covered all of the 540 bases that we expect to be tested if you're going to be a member. But these are some of the areas that actually you should be looking for. Now, you may use FCSA member companies, you may not. That's fine, and that's your commercial choice. But what I would encourage you to do is look at some of the details within the codes. The codes are freely available on our website, but here's an example that highlights the areas around holiday pay. As I say, whether you use an FCSA company or not, this is the type of best practice you're looking for, because is there a legal risk to you in holiday pay? Probably not, because the umbrella organization is the legal employer of that contractor. So if they err in any way, it is them that are liable. But actually the real risk for you is a reputational one. Do you want to be associated with an umbrella company that doesn't apply this set of standards. And if necessary, take these standards and apply them to the contracts you've got, whether that be FCSA members or not. And you can see on this page that what we do is we ensure that there is a cross-reference. So we start at the very beginning, and that's where I would encourage you to start. Start at a financial illustration. That's the starting point for a conversation with a contractor. So why shouldn't it be a starting point for a conversation with you in terms of when you award contracts to umbrella organizations? That then filters through in A8H all the way through to a contract of employment and then assignment schedule. So the areas that we're looking for in terms of accrued, and I should say accrued is the default position for FCSA, but as Simon has said, there are caveats in terms of transparency and in terms of the comprehensive way it's covered to run rolled up holiday pay or advanced holiday pay, as we refer it to. We allow for both because what's really important to us is that we put a set of extremely transparent, tight standards around how holiday pay is operated. And because of the caveats within the steel case, we felt that we should give you, the supply chain, and also contractors a series of compliant and a series of compliance standards that we could test and we could assure the marketplace of. So we move on to contract of employment and the assignment schedule, and then that has to clearly state what the entitlement for holiday is and how it's calculated. And then the final one, confirm that throughout the holiday year, when an employee is approaching the holiday year, you remind your employers to take holidays. This is the really important thing that I think has to be done, and that is proactivity. A contract can simply say on page 14, if you don't use it, you lose it. My contract says that. My contract says if you can't carry on, you can't carry over more than 4 days. But actually, because I've got a different relationship with FCSA as an employee, I sort of know that. I know what my entitlement is. I know what the repercussions are. A contractor who might be on maternity leave, paternity leave, moving into another contract, going through 3 separate umbrellas in a year, won't necessarily have either the knowledge or the time or the understanding to do that. So we insist, and I'm suggesting you insist, that actually you see an element of proactivity where the umbrella organization, as set out in A10, actually has a responsibility to engage with the contractor before the end of the holiday period or before the end of the contract to ensure that they know what they're entitled to, and they can refer to that payslip and clearly see what they're entitled to. If we could just move on to the next slide now, please. And this is just a confirmation of that proactivity. And again, I'm more than happy for you to steal all of this and apply it to your own compliance packs, so that actually what we do is start to spread a series of good practice behavior throughout the entire industry, and we start to reduce the amount of, for want of a better phrase, exploitation in terms of holiday pay from the entire sector. And this just shows, this particular slide just shows again, transparency and proactivity, so that actually, for instance, in A18, confirm the payslip or portal provided to employees displays the accrued holiday, to make sure that if actually you are going to advance the holiday, advance holiday pay, in other words, roll it up and pay it, that's clearly transparent in the contract, and it's very clear that the contractor is willing to engage with that they sign up to that. Again, going towards those caveats that came out of the steel case. So that's what's happening in the sector. Some of it's not good. FCSA are doing their very best to eliminate the stuff that isn't good and to provide you with a choice that is, as hopefully you'll see, is transparent and is compliant and is ethical. And ultimately, the bottom line is, if the contractor is if you are paying an assignment rate that shows an amount to be given to the contractor for the gross pay, that they get all of that holiday pay that they're entitled to. And that's primarily where we're working at the moment.